Tesla update here on the 21st. So this video is just going to be Tesla. I own some shares. Some other people probably own some shares. It's a pivotal time in the stock. And you better be hedging right now because we're probably going to go lower. So I'll break it down. It's pretty simple right here. We hit the 1.61 fib. Pretty much exactly. So I think we held the 200-day weekly, or 200 weekly moving average. So third wave is likely finished here. It's a lot of selling straight from 269 all the way down to 210. So I would say the third wave should be finished. However, I'm not looking for a huge bounce here. First wave ended at 234. We could potentially see just something between 220 and 225. So 223 is a 0.23 fib, potentially 230. There is a gap up here at 242. That's not going to be filled anytime soon because that would invalidate the whole move. So if it does invalidate, I guess it could be filled, but I don't expect it to be filled. So yeah, you can see the whole structure of this. This right here is just telling you that we're probably going to go all the way down here to minimum 198. But if we bounce here, let's just say we bounce to the minimum 223. You can take this first wave, put it on top of here at 223, takes you right down to this demand zone right here. Show you it's a demand zone right there. Not 100%, but pretty much a demand. I think it's 4 hour probably better. Let's see the 4 hour. Yeah, so you can see here, there's a gap here maybe too. Let me see. There's no gap, but there is a 4 hour demand zone there. So I would expect 185 to 182. If that happens, we will be below the weekly and the daily 200 DMA. So in that case, we get 5 waves down here, like that. If we hold this trend line, let's say we hit it at the end of November, we hold this trend line, it can be ABC. So it can be ABC. In that case, let's zoom out. In that case, there's still a very good possibility that we are looking at this as a nested move, which means this is 1, 2, 3, 4, and 5, or it's an ending diagonal. Could be an ending diagonal as well. So it could be 1, 2, 3, 4, and 5, like that. In that case, I would expect it to go above 400 though, so it'd probably be a pretty big fifth wave, and that would be a really big move. So that is a possibility, or a nested move higher, or some kind of corrective move that would be unpredictable from here. So that's the first possibility. Second possibility is we break this trend line here. If we break that trend line, the target would be the 1.61 fib here at 172. And that would probably look like this. Maybe this third wave is not finished. Doesn't matter. Probably be something like this. And then you're looking at this not as ABC anymore. You're probably looking at this as a 5-wave move. So that means there'll be even more selling after that. And actually the target would be down here at like 140, 150. There's 2 gap fills here that we created in January. Those would probably get filled. And then that would be the end of a 5-wave move lower. But if you look at the structure of this move now, you have to zoom out even farther, you can see now we have a lower high and a 5-wave move down. So now we're probably just in a wave A of a Y wave at that point. If we come all the way down here, we're probably going to do this. We're probably going to do that. So, yeah, it's very pivotal to hold 185 and 190. If we don't hold that, we don't hold this parallel line, this can happen. And this would mean that the fourth wave was not finished right here. It just ended up being a very drawn out WXY move. And then people are going to get a buy in this stock at 80 bucks. We're at 210 right now. That is a pretty big loss. So, got to be very careful over the next couple of weeks if you're in this stock. Look for a bounce, and I will be hedging it hardcore. I will be hedging it. I own shares. I might even go delta negative, which just means that when the stock goes down, I make money instead of losing money because I have shares. So I might even go delta negative. I was delta neutral on the last move, but delta negative would just keep my portfolio going up no matter where this goes. So yeah, expect a bounce and then lower to 185, 190. If it breaks below there and goes to 172, then we're probably screwed, to be honest. Like, it's probably going to go to 80 bucks. So, that's just my thoughts on it right now. We would be below the 200-day and the weekly if we go to 185, 190. But it might be, since we completed 5 waves and it's ABC, we'd probably get a big enough bounce after that to reclaim the 200 on the weekly and the daily. So, that's pretty much the analysis. Look for a bounce probably next week, 220 to 230, and then get ready to hedge the heck out of your position if you own shares. I made a small mistake. My mistake was because I own 300 shares, and then I sold 3 contracts of 240 puts before earnings. Actually, that was my hedge of my hedge. So basically, I had those, and then we started selling off the day of earnings, and then I made my portfolio delta neutral before the close, before earnings came out, and then we lost all that money. So I made a ton of money on my hedges, but I still have those sold puts, and they're down a bunch of money. So I might be able to get out of them if we get back here to 230 with a small loss, but I think I'm probably just going to take the assignment and then just hedge. And hopefully, this works out. Because even if we come down here to 150, I'm just trying to see how far this would retrace. We would probably still retrace all the way to 220 after that. So it'd probably look like something like this. That's kind of what I would expect if that were to happen. So we still get back up here to 220, maybe even 240, and fill that gap. So expect more selling going into the end of the year. Nothing bullish about this move right now. Of course, it could invalidate, but I don't think it's going to. We'll reevaluate next week, but that's all I got for now. Leave me a comment, like, subscribe for more updates. Catch you in the next video.